like CCI and you like the Rune oscillator or the Gator, whatever, dude, right? But you're using every tool and every resource in your power to buy what you consider a dip. And with that kind of thinking, you'll be better off in the long run, because a lot of people are making many choices here, buying and selling, when to me, really what you have is you're buying off the 21. It should go up for quite some time. It's bullish and aggressive. And right, one of the things we talk about, I think at the very beginning of the day trading course, is that we live in the Wicks. You will find us like ninjas hiding in the Wicks. Right? Day traders don't trade candles, they trade wicks. And when you get to that aha moment, you'll get to the next level. You're like, it's all about it. So let me give you an example. I don't think I can zoom in any closer than I am now. But see the high of yesterday and the low of today? That's it. That's your setup. Okay? So in the anatomy of a candle, you have the high, you have the low, and you have the close. And of course, you have an open. So how does that work? High, low, open, and close. Okay? So, what is it? Is it a green candle or is it a red candle? It's a green candle. Okay? So it's not a very helpful candle because, let's do it this way now. It would be drawn like this. Okay? Because it doesn't give us a lot of direction, but it gives us some direction. But if you get a candle that looks like this, is that helpful? Depends on the high and low and the close, right? So if this is the open and this is the close, then you've gotten yourself into a green candle. Okay? But here's the thing. A Fibonacci trader is now measuring this from here to here. 0%, 100%. So they might see this as a 382. This is a 50%. Right? This is a 618. So how would a bull treat a scenario like that? Okay? They're going to buy a dip. And you get yourself a new green candle. So here's your open. Here's your close. Okay. Or that could be the high, and then your next close might be here, let's say. So let's change that. So your new candle would be a square bottom. Went a little higher, and then it came back, and then closed here. So you'd have a new green candle. Okay. So my point is you look for the highs as a bull. You look for the highs. You don't trade the highs. And your money, your patience, and your discipline is trading these wicks. Well, let's change a color. It's easier to see. I guess purple. You're supposed to recognize what might be the high, let it pull back, and buy the dip. Let it make a new high, recognize where that high will likely end. So like key pivot points, for example, key psych levels. And you want to look for this dip. Okay. So you're more interested in these purple ones. You're more interested in the down during an uptrend. Okay. So it's the wicks that are important to me. You'll find out a wick will develop in very key places. So let's say I'll make up a line here. Let's say, well, you know, okay. So let's say this is resistance. Why? I don't know. Doesn't matter. It just is resistance. Okay. A bull, let's do this in sort of a greenish tone. Okay. We're looking for moves like this, correct? So understanding that price is likely to hit resistance and then have some sort of pullback is helpful because you know hitting resistance is not a buy, but catching the pullback. So you're looking at wicks here, right? So, right? So you look at things like, what is this roll reversal going to be? Is there another psych level? And your new plan now is, use all your tools to identify how price might behave in the future. And these sort of dotted arrow, this dotted arrow is kind of like the potential for the future. Where will it hit support? Where will it go up? How big will the upper wick be? You could have like this, but this is rare. Okay. You can have this. Okay. Or you can have this. How big the wick? Is it a 0%? Is it a 21.4? Is it a 50%? Okay. You don't know. So you have to say, well, where is the roll reversal? Where's the next psych level? Okay. Morena says, well, what about a wick with no candle? Okay. Well, that tells you, no wick, right? A candle with no wick just tells you, for example, the close is at the high. That there was no profit taking. So the way I look at wicks like this is they're not created by sellers, right? In green candles, we're looking at green candles here. Okay. In these green candles, the wicks represent profit taking, not sellers. So there was no profit taking, which means you're not likely to be at resistance. Okay? Which would say most of the time, depending on the situation, like you can have them so they're so stretched out that they get cut like an Arctic turtle. There's different scenarios, but generally what that would tell you is in that time period, there was no profit taking. Okay? So there's no sellers at all, not even bulls getting out, not bears getting in, no selling. So there's no real opportunity as a bull because you'd be forced to buy high, but we don't buy high. You understand? We don't buy high. So you can't do that. But it does tell you that for whatever reason, there's no bulls and no bears. No bulls taking profit. Okay? And the ones that are buying are probably foolish or unbelievably confident. Either way, it's not ideal, right, Marina? So what I like to do, though, I like to buy the trend. I don't want to buy at the top. I want to buy a trend. I want to buy a higher low in an uptrend. And so I'll spend most of my time thinking about where's the target, where's the next level of resistance. Now, in some cases, that might tell me if I'm already in a trade that I must exit my trade. Maybe that's a weekly R2. Maybe that's a monthly M4. Maybe that's a daily R3. But for whatever reason, resistance might be where I bail. And part of that wick is me leaving, selling my uptrend to somebody else. Hey, man, I've been in this uptrend for 4 days. You want to buy it from me? Okay. So I'm selling it. I'm not selling the market. I'm selling my position. Doesn't mean I'm a bear. Doesn't mean the market's bearish. It means I want to take profit, sell my risk to somebody else. Okay. And other times it's just a blip along the way, a bump in the road. So I'll say, well, I want to buy the next higher low. Is it going to be 50%? Is it going to be 618? Is it going to be 382? And then I use all the tools I have to try to estimate where that is probably going to be. We're looking at the probability of this making another higher high. So if it makes a 382 and starts going up, the probability is pretty high we'll make a higher high because no bears were attracted to the position and bulls got back in. So it's more attractive. Therefore, it's got a higher probability because it's got new money coming back in to make a new higher high. So the next candle is created. And then sometimes you get to resistance levels that have high confluence of resistance, meaning bulls are actually thinking about taking profit. Okay, they're thinking about it. They're thinking about it. They're thinking about it. And bears are ready, willing, and able to drop a lot right on top of you. Okay, so that's a real battle. And some of that is stop hunting by bears, right? Trying to force bulls out at obvious levels of resistance. So you got to know where those are, and that would be not where you want to fight, but where you want to bail. Okay? So we live inside the Wicks. Okay. So this is why I start with top down. I mean, real top down. I start with macro first. Okay. That gives me bias. Then I will open a chart like this and say, sell? No. Impossible. You see that? You look at a chart like this and it's impossible to sell. Now, someone might come along and say, well, Wayne, I think the market's wrong and this is going to hold as resistance. And I'm like, okay, but I'm not going to take that. It's not what I do. So if I was going to be a bear, we're going to need at least some bearish price action. So I don't like selling highs. Okay. I need to see a reversal pattern here before I become a bear. But I don't want to become a bear because of my fundamental bias. So my fundamental bias is way ahead of all of this. Okay. Way ahead of all this. My fundamental bias says Swissy should be weak. Today, tomorrow, yesterday, next week, next month. So now I just say, do I like to buy up here? Now, I'm not too worried about it because we just talked about probability, and this is a nice reload off of a daily 21. So that tells me we are probably going to go higher. Okay? But I don't like buying at resistance. That's why this is important. That's the setup. Okay? So now how do we get into this a little deeper? Okay? And there's your sort of tricky role reversal. It's tricky. Oh, yeah. Oh, it's tricky. Okay? If you didn't get it, I understand. If you got it, you were sharp. But look, when you get away from the technicals, okay, let's do this. Indicator. Let's just get rid of pivots altogether, for example. Okay. And let's get rid of these big moving averages. Who cares, right? Or medium moving averages. I want to show you that this stuff is helpful, but it's not the basis of your trading. Okay, we got a triple bottom, and you're already a bull. Do I have permission to buy? And so now what you do is you look at like key psych levels. Oh, this is 28, 128, okay, 129, and we're at 130 now. Okay. You see how we're just bouncing around these psych levels? Right? Like you don't need the most advanced AI in the world analyzing 1 billion variables every second. Like, dude, buy the dip, bro. Buy the dip. Well, which dip? Yeah, that's your job. But at least now you know your job is to buy the dip. And you're like, which dip? Yeah, that's right. That's why someone would hire you. Okay? But trying to figure out that this is bullish fundamentally and on long-term technical charts is not a complicated matter. Okay? Okay? Look at all these role reversals. There's little trades inside the bigger trades. And are they perfect? No, dude. Right? Are they perfect? No. There's some beautiful trades in there, but you're not likely to see perfection in Forex. Even supermodels get zits. Okay? This is not perfect, but it's beautiful. Perfection is probably an illusion, a fantasy, and a mirage. Take a look here. This is a 15-minute chart. What does the green zone tell you? You should buy. Huh. Whale oil B. Well, how did you know it was bullish? Maybe this was a bottom. Maybe this is up, right? Maybe, like how did you, what? Dude, look at it. Beautiful, huh? So you can see we are thinking up, and it's not quite a 382. I wonder, it's not a 786. Wonder where it's coming from. Yeah. don't know what to measure there. Long and gone. Lufletuliumum. Just this nonsense here. And then roll reversal here. No. Right? Cool. So what are you going to do next? Well, remember that pound Swiss I just showed you. How it was messing, right? Range for a while, break out of the range for a while, breakout. Hey, remind me, my swing traders, in the swing trading group last week, didn't we talk about, it seems like something we might have talked about, where we talked about range, break to the upside, range, break to the upside, range, break to the upside. Was that the swing trading group? Oh, it was here? So, again, not perfect examples, but definitely examples of that kind of behavior. Okay. And look at the amazing analysis I did. 128, 129, 130. So obviously, if you use better tools, you could probably get more accuracy. Okay. 129.50, 128.50. You see, guys? Every 50 pips. Double bottom, psych level, up, right? Up, boop, boop. So whatever. Range before reversing. Thank you. Thank you, Gary. So here's the more complicated one. You can see what I wanted, and I got a 786, and I got to be careful here. What this is telling me is dollar's not the play yet. We still haven't completed a rotation from yen to dollar. That's one of the themes we've been talking about, and right now that has not happened yet. I'd be remiss not to mark my charts properly, and now I have to see, are we going to range? I kind of like the probability here, okay? I see that. That looks legit. I get it. It's farther down than I would have liked it, but I get it. I can see that. So what happens next is supremely important. Okay? I don't even think we'll get that. I think we'll get... Okay? So, yeah, I'll catch the next wave, catch the next bus. Okay? It's a long journey. Miami to Denver. Cool. Interesting. This must be an example of the sideways first. Up, down, up. Probably could refine this slightly now, but so far the bottom's great. So this is the trade plan we had on Thursday, right? So far, so good. There might need to be a revision, like maybe it kicks off up here, 83.50 instead of all the way back, but whatever. Right? Like what I'm saying is this might be legit too. But this is what we did on Thursday. Cool. So far, so good, right? It bounced on our line at, what do you want to call this, 82.5? And now we're at 83.5. So more than that. So we're up about 120 pips off that bottom. Huh? Okay, cool. So are you a bull or a bear? I don't know what your answer is. I don't even care, as long as you know. The second thing is, what do you do now if we've kicked off of a support level? Maybe you buy the dip. What dip? Exactly. You're like, tell me, Wayne, tell me. No, it's your decision. You said you want to buy dips. Good. Go find yourself an opportunity. Okay. Maybe you said right at the London Open, you couldn't resist. You couldn't resist a 3A2 buying it at 83.50. Okay. You just couldn't resist it. It's beautiful. 3A2 Fibonacci retracement. You already know you want to buy, so that's not complicated. You know you either buy in Asia or you buy in London. Okay? Now, we also know you don't buy high, so you can't buy in Asia. So it comes down, you walk into London at a 3A2 and you're like, oh, I got this shot in my bag. Okay? Why? Because you're not trying to decide what to do. You're only trying to decide when to do it. There's a big difference. I think those that struggle show up every day not sure what they're going to do. Rookie says New York would be too late. Yes and no. It's never too late to do your job. Okay? One thing that I've taught over the decade and a half that I've been teaching is that if you are patient and disciplined, Forex loves you. That's why you need to learn how to be patient and disciplined. So if you miss it, you wait. And very often, those who wait will be rewarded. You will get a dip. It will come back for you and give you a second chance. So you always do your job. You're always ready, willing, and able. You don't know exactly what the market's going to do. You don't know exactly what the enemy's going to do. But you're highly trained, highly armed, right? Ready to adapt. So you adapt. If you miss it, wait for the next one. I think we've all tested where you're in a bit late and you get in anyways. And you're like, well, the difference is only 30 pips. And then you find that you get punished by that pullback. Okay? That's why if you're patient and disciplined, you'll say, oh man, this is so great. I missed it, but the market came back for me. Thank you, Forex. And then you place your trade where someone else has to take a negative 30, negative 40 drawdown, waiting to get in, instead of waiting to get in the trade, they're getting in the negative, right? Because they were not patient and disciplined. Very often that'll print a losing trade for you because many traders here can't take a 40 pip loss. It's too big, right? But also, what is your average winner? And you might find where if you go negative 40 and then you got to go plus 40 just to get to break even, and someone else was patient and disciplined and got in a better price, and now you've made no money because you were not disciplined, and now they're up plus 40, who's going to be able to take profit first? So now they might be up, let's say 65 pips, and you're only up 25 pips, and you're like, I can't take a 25 pip winner. It's too small. And they're like, well, it was just a little pissy little day trade, and they could. 65 pip winner is not a high fiver, but sometimes you're picking up pips and putting them in your pocket, depending on the time of year, right? Okay. Remember, you're looking for the wick, not the body of the candle. If you're trading the body of the candle, you're too late. Okay? You're late in the sense like you should have bought hours ago, or you're too early in that you might have got an okay price, but tomorrow. Because for example, let's do it this way with arrows instead of candles. Oh, I wanted that green. Let me do this again. Okay. Depending on the time frame, okay, there's no trade here if it's like a 15-minute chart or a 5-minute chart, but on the daily there are. Because again, what I'm trying to teach you is when you sit up and take notice is this period. This period. So when you see a giant green candle, if someone's just entering a trade here, they're not trading properly. And most likely, at best, they'll be break-even traders. Has anyone here tried this strategy? I think it's actually taught by gurus. You wait for the break. Has anyone been taught this? Has anyone tried this? Go on, there's 150 people here. Has anyone run into a strategy like that? Wait for the break? Even 15 years ago, people were taught to wait for two candles to close above that before you buy. Really? No? That's not taught anymore? Okay. So here's the problem, and this is why those traders most likely break even. Because they get knocked out on something like this. Okay? And that's it. They're out. Well, here's the funny thing. I thought you were a bull. I thought those traders were bullish. Oh, they were. They bought it. Well, it hasn't made a lower low, so why are they out? Well, they bought too high. They were up 25 pips profit. Then they jammed their stop. And then it came back and it knocked them out. So that might be break even. Okay? At best. What I mean is at worst is that they also don't have the discipline to get out or back in or whatever. Like they're doing so many other things wrong that even a situation like this over the course of, let's say, 100 trades, whatever the sample size is, there's also mistakes beyond these break-even trades. And you're never going to be profitable if, that many of your trades are break-even. I don't mind break-even when you're breaking even correctly. This is a great trade done poorly and does not lead to success. And if anything, it'll force the trader to change their behavior in a negative way. And they'll pay the consequence there. So what do we know to be true? Like, what's the next candle? This person just got knocked out. Let's say break even. The next thing happens here. They were in a good trade. They were up 25 pips. It came all the way back. They broke even. And then, sure enough, just moments later, it skyrockets back up. And they were in a good trade, but their broker hunted their stop or some whiny nonsense of an excuse. Where I teach is trade this pullback. Trade the wick, right? Trade inside the wicks. Which means you always can foresee the future. When you see higher highs, you're like, oh, that is so awesome. That is so awesome. Look at that higher high. That confirms my fundamental bias. That confirms the trend is in place. I can't wait for it to slam into resistance and come down so I can buy it. Other people just jump in. They're like, oh my God, that's another green candle. And they're in. Okay. You know what I also used to see back in the day? For some reason, people would sell higher highs. It was like a common theme that just newer traders would be sellers in an uptrend. This whole idea, oh, it can't go higher. Really? Like, why not? Okay. So anyways, so hopefully that was a helpful refresher or maybe an eye opener, depending on how long you've been trading. Could I be so bold as to ask for you to click the like button? 2/3 of you have not clicked the like button. Would you please do that for me? Or for YouTube, really? Cool. So let me get the calendar. Let's use the one on Trader's Way instead of Forex.Today. Let me see if I can find it. Bum, bum, bum. All right, so yeah, it's all right. It's got some pluses and minuses to it. I like the one on Forex.Today where you can just say look at today or just look at high value news and stuff. But this is nice because it gives you better overview. So we'll use this one. Oh, save that as a lesson. Which one did we do? Candles?